It's Thursday morning live, and we are live. Hey, I am excited about our guest this morning. I'm going to be joined by Veena Jetti with Vive Funds, and we've got a lot to talk about this morning. We've been talking the last few minutes before we got started just about some things in the market and changes and what's coming up in the future. So we're going to cover a lot of that this morning. Hey, before we get started, one thing I always ask is what's your intentions, right? What are you being intentional about today? And what can you go do to be even more intentional? Have you sat down and thought through your day, thought through your week, and maybe even the quarter, how you're going to take action and move your business forward? So work on your intentions, write those down. The other thing is gratitude, right? Let's make sure that we're being grateful for what we have in our life, what's going on in our life, and how we can be a blessing to somebody else. Remember, please go follow us on social media, subscribe to our YouTube channel. You know, we're here every Thursday when we pop up and Saturday for MultiFamily Unplugged. But when we pop up, then you'll get notified. So please go and like us, subscribe, love us, all that crazy stuff on social media because you'll know where to find us. Let me bring our guest in and get started. Hey, good morning, Veena.
Hey, good morning, Mike. How are you?
I'm good. I'm excited about this morning, especially after the last couple of minutes of conversation. Here's one thing I always say is every time I do one of these, I learn something new. You know, and I've been in the business 30 years, and you know, it's interesting, and I love the multifamily space because I always learn something new. So it's kind of cool, right? So, hey, one question I always ask people is, in one word, what best describes you personally and professionally?
I think recently, and it's something I've been focusing on, I think the word would be intentional.
Okay.
So I try to be intentional with everything I do now, especially because, you know, I have young kids. So work-life balance is really important. So when I do something, I'm intentionally choosing to do it and I give it my all, regardless of which aspect of life it's in. So I think intentionality is something that I've been focusing on for this year.
You know, isn't that funny? That's the name of my company, right?
Yeah.
My core intentions, and I mentioned that coming out of the gate this morning. You know, we have to be intentional about what we do. If we don't, I think that we wind up just kind of like swimming around, floundering around, wondering, you know, what's the next thing to do.
Yeah.
I learned here's something pretty interesting. I learned a long time ago from a real estate sales trainer that if you are not intentional, you find yourself just being lost all through life. And you know, I think that it exemplifies where your progress, where your success is at today, and where where you've come from. So, why don't you talk a little bit about your story, how you got to where you're at, and what you're doing today?
Yeah, so I'm a large multifamily owner operator, meaning we only underwrite deals at this point that are over 200 units with a target of 75 million to 120 million on purchase price. We are typically targeting assets in the Sun Belt region with a value add component. So we really focus on like that Class B value add space. And we kind of rinse and repeat. We've raised all private capital to date. So well over 100 million across our assets, probably maybe getting closer to 200 million at this point, but I haven't added it up. So and how I got here really is so I took a little bit of a shortcut in because I come from a real estate family. My mom, as a successful real estate investor, ran a real estate investment company. I graduated from the University of Illinois in Chicago with my degree when I was 20 years old in finance and thought I knew everything because I was 20 and had a college degree. So instead of going to work for my family's company, like my mom had thought I would, I ended up going to work in the corporate world, in corporate real estate, made a lot of money for other companies and ended up leaving back in 2012 where I started my own company. And now, you know, kept scaling up. And now here we are today. I've transacted on over 620 million of assets in my portfolio and, you know, continuing to scale up.
So, you know what they always say? Are you going to go full time soon?
Maybe. I'm thinking about it.
Hey, you know, interesting thing. We figured out this morning that we both grew up in the Chicago area, not far from each other.
Nope.
And, you know, you obviously didn't go into the family business was real estate, I'm assuming.
Yes.
And was it residential real estate sales or commercial or?
No, actually, my mom was an investor, residential investor. Now my family's completely divested from their portfolio and they're 100% invested as passive investors in my deals. So no pressure, right?
You probably wouldn't have had it any other way, would you?
I mean, I definitely like multifamily over single family. So I can confirm that this is the way to go if you want to scale quickly.
It's hard to go home for the holidays when nobody's invested in your deal.
Yes, yes. Well, I'll say I initially my dad actually was one of my first investors. He actually took a risk out of the gate. My dad and my uncle really saved a deal that I thought was not going to happen.
Wow.
Um, and so I'm very grateful that they were willing to put everything on me. But, it creates a lot of pressure. And, it's more pressure for me than it is having like a random person's investment, right?
Yeah,
Because I have to
right.
see them on Thanksgiving still.
Yeah, for sure. Hey, okay, so a couple big questions that I have,
Yeah.
and how are you sourcing, knowing how the market is today, where the market's at, and actually, we've been doing this long enough to know that where the market's headed, right?
Yes.
So kind of have that forward look. But how are you sourcing deals today? And this conversation, and this is why this comes up. Last night, I had this conversation with a couple people we know, Amy and Aaron and Candace
Yeah.
and we're like, are the deals any good right now? And where are you sourcing deals from?
Yeah. So to answer your question, we're basically losing every deal we put an offer on. We're offering on hundreds or looking at hundreds of deals, offering on dozens of deals, and not even making it into the best and final round. And like I said, we're targeting $75 million and above on our deals. So we're not targeting smaller deals where there might be more investors. We're still competing against 20, 30 or more offers. So right now we're targeting deals. Mainly, most deals are transacting through brokers, either on like a soft listing where they're sending to us a little ahead of time, or going full market. Especially with competition in the market, as a seller, it is oftentimes the prudent thing to do to put it through a full market cycle for your investors. So we are getting most of our deals through brokers. Deals at our size don't really trade truly off market or on a wholesale basis. It just, the sellers are very sophisticated usually, and so we're targeting through brokers right now. I think that the answer to your question about whether deals are any good now, I think it depends, right? Because it depends on how aggressive your capital is, how efficient your capital stack is. If your investors require a 20% plus IRR, then no, it's no good. But if your investors require a 12 to 15% IRR, then yeah, I think you're still finding deals that hit that criteria. It also depends on what your business plan is going to be. Are you going to be able to add value to the asset? Are you going to be able to operate it more efficiently? Are you going to be able to save on expenses? Are you going to be able to, oh, sorry, I thought I got frozen for a second. Are you going to be able to cash flow? Can you stack the debt more efficiently? Can you reposition the asset? So there's a lot of questions that go into what makes a deal good, right? Because you and I both know you can underwrite a deal and I can underwrite a deal, and we can come out with completely different
Right.
numbers, IRRs. So
Yeah.
I think it depends, but I'll say we're not winning on pricing right now. We're usually not the highest bid. We're winning on terms. We're competing on terms primarily.
When you talk about terms, are you talking about that you could close quick and your certainty of close and that you have
Yep.
capital and
Yep. And we put money hard, significant money hard day one. We add hard money after due diligence is complete. Some of our deals we've closed in 42 days with no extensions. So we move quickly, but
yeah,
and the sellers like that because they know that there's certainty of close there, especially if they have something like a Delaware trust. They want to make sure that their DST is closing, or if they're circling securities for defeasance, it's very expensive if you don't close, and no one wants a hassle of going through a breach from the buyer. So I think that that's been a really significant factor.
Yeah. Hey, how many people on your team?
So we have, so my sister's actually a minority partner in the company.
Okay.
I have Caitlin, who is our admin coordinator. She really does everything. She's the glue that keeps the company together behind the scenes, if I'm being totally honest. We have an underwriter. We have an asset manager. We have marketing. We have actually have like a whole team of marketing. So we have about 5 different aspects of marketing and investor relations that we operate with. And then all of my deals that I've been doing have been actually a JV with Blue Lake Capital, which is another woman-led company led by Ellie Perlman. And so our teams kind of share functionality and responsibility. And then, of course, we have our securities attorney, our tax strategist, who, both of them I've been working with, our attorney for 13 years. We work with Nick McGrew out of Los Angeles at Polymath Legal.
Mhm.
And then our tax strategist we work with in our accounting firm is PB Strategies, Precision Business Strategies, Larry West. You guys might know him. I've been working with him for like 7 years now. So our teams are very long-standing too.
Yeah. What I love is that and you just mentioned it, that you're women, all women, right? Put
Yep.
together. And I have a lot of respect for that. I think that's awesome. So
Thank
there's a
you.
lot to be said for that in the marketplace. And in what was once probably a male dominated space, right?
Still
Where,
is.
well, yeah, but you guys are making such a difference and such a footprint that, and I think it's awesome. So,
Thank you.
um, and here's the cool thing is there's so much to learn from you, right? And there's so much to learn from the other women in the space. I mean,
Absolutely.
when we talk to some of the people that we know, it's like, gosh, you know, I'm like,
Unbelievable.
yeah, I've been in the business 30 years and I keep learning, so it's just fun.
Right.
So,
Yes,
um,
absolutely.
so, uh, so talk about raising private capital. Oh, you had mentioned marketing, right? You have a whole
Yeah.
team that does marketing, and
Yeah.
I always come from the aspect that, hey, listen, you need to be a marketing company wrapped in a real estate sales blanket, or real estate investment
Mhm.
blanket, or real estate private equity fund. So, talk about that. How do what does that marketing do for you? Where do you market? What's that look like?
Yeah, so we actually didn't really heavily invest into marketing until this last like year and a half
Mm.
ish. And that's when we first started marketing and advertising. And we're still actually kind of gun shy about it because most of our referrals to our investors come from warm leads, right? So it's current investors that provide us with contacts to their family, friends, their networks. And that is obviously it's the easiest way to raise capital because they already know, like, and trust working with you.
Right.
And so that's kind of how we have had our success to date. But now we're trying to expand those networks a little bit so that we're not so reliant on the same capital. We can do more deals. We can do more deals simultaneously, potentially. So that's kind of the focus that we have for 2022.
And how do you, any systems and processes that you have that you use to help raise private capital? Are there anything that you do specifically? Like I always say, there has to be daily fundamentals in our life, things that
Yeah.
we master, that repetitious boredom to really get good at.
Yeah, we have lots of systems, lots of systems and processes. Because when you're talking about raising $30 million in 42 days, you have to be efficient and your investors have to be efficient, right? And you can't take it one call at a time when you're raising $50,000, $100,000 at a time. So what we do a few different things. One, we educate investors in between our deals. So by the time we have a deal, our investors already know they want to invest with us. They're just waiting for the opportunity to come up that they can invest with us. Number two, everything we do at Vive is starts and ends, and along the way everything is LP focused. So how does this affect LPs? And when I say everything, I mean when we introduce new systems or processes, I mostly care about how is it going to affect the LP, followed by is it functional and helpful. down to even our, like when I chose our brand colors and we did a brand refresh, when we chose that, it was, okay, how does this affect the LP experience? We're redoing our website. How's that going to affect LP experience? In doing so, you can raise that capital from not just your current LPs, but also their networks too, because it's a much easier capital raise.
Yeah, that's interesting. And I like what you said, even just down to the colors, right?
Yeah,
About,
everything.
what is your investor looking at? What's that visual? It's like if you or I pull into a parking lot of an apartment complex that
Yeah.
we're looking at buying, right? You go, is this something that I want to buy?
Yeah.
Because that visual component.
Matters.
Yeah, it matters a lot. And I think it matters, the sexiness of that deal matters to the investor as well. So
Yeah, absolutely.
Um, so is all your money private equity, or are you doing family office, institutional?
So we have not taken in institutional funds yet. We have certainly been in negotiations and talks with major players, but we're a little trigger shy to take in institutional capital.
How so?
Their reporting requirements are just much bigger than what your standard is used to. They also want a lot more control over the deal, which that for me is the hardest to give up, is the control, because we have our LPs in the deal, and I want to make sure that we can act in their best interest, not in an institutional fund's best interest only. So that's kind of the hardest part for me. We have not really found the balance of where it makes sense. Also, their requirements on fees are totally different than private capital. And so it's the same amount of work to manage the deal and execute the business plan, but the fee structure is not as lucrative for if you deliver.
Yeah. Isn't the cost of capital though on the institutional side less today? And don't you think that moving forward it's even going to be less? Oh, and here I just want to circle back. You said educating your investors at 12 to 15%. I've been saying like 13 to 15. So I like that you're saying 12 because I think that's where the market's going to go.
It is.
I
Yeah.
think our investors need to understand that the days of 8%, 9% prefs and cash on cash are going away. If you can't get in a deal today that's paying, you're probably not going to get in one next week.
No, yeah, I think as far as prefs go, we are currently underwriting to like a 6% pref, and I actually am not even seeing 6% cash on cash during the hold period on our deals, which just 6 months ago we saw that. Right now we're seeing 5% on our assets. And I always tell investors, because they'll say this to me, they'll be like, oh, I looked at these other deals that are giving me a 20% IRR and 8% cash on cash. I'm like, no, these are pro formas. Whether you actually get that is a totally different scenario, right? Because I oftentimes can deliver well above the cash on cash that we have projected, but I'm not comfortable making those assumptions and putting those out to investors. I would rather under promise and over deliver. So we closed a deal in October of 2020, and that deal, we had put out a 15.31% IRR projection, 1.7x equity multiple, and the average annualized return was going to be between 14 and 16%. We are exiting that deal 19 months later with a 45% IRR, a 50.32% average annualized return, and a 1.8x equity multiplier, which is all higher than we projected on our 5-year horizon in just 19 months.
That's what I call under promising and over delivering.
Yes. And those calls are really fun to make to investors.
Yeah,
The
right.
ones where you're saying, hey, we totally overshot what we could do is not as fun. So always under promise, over deliver.
Yeah. And we have that going on right now on one of our deals where on the rent growth, right? We under promised on rent growth and we're far exceeding it. What markets do you like right now today and moving forward?
Yeah. So right now our target for 2022, at least through Q2, is Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona, with like a big asterisk on Arizona. So I don't know if we actually will enter. We've been underwriting all of these markets for years. We typically look at markets and kind of keep it behind the curtain for anywhere from 18 to 24 months before we actually enter those markets.
So let's shift it up a little bit. It's been great this morning, but I'd like to hear just some fun things about you. And I know that you travel a lot and been around, and I want to favorite tourist attraction you've seen.
Oh, actually, this one actually surprised me, but the Taj Mahal.
Really?
Yes, I didn't think I would love it as much as I did, but we did the tour and it was built in like the 1500s.
Right.
The precision of the architecture and what they did without the technology we have today is breathtaking. It is amazing. And they let you touch the walls, which I really like to like touch things and kind of see what they feel like. So that made me happy. But it's breathtakingly beautiful.
Wow, that's pretty awesome. It's pretty. I've never heard it explained that way.
Yeah.
So I love the fact that you said that without the technology we have today, that the precision of the craftsmanship was what it was.
Amazing. What's so cool about it is there's a spot in it where there's an arch that's like a couple hundred yards away from the entryway, and when you stand there, it actually lines up perfectly inside it. And they did that without any lasers, which I don't know how they did it.
Yeah. Power of the eye, right?
Yes. I mean, it's truly remarkable.
Probably the same way you look at a multifamily deal. And how about a favorite restaurant?
Oh gosh, there's so many. So my favorite place I've ever eaten at is actually in Madrid. It's this restaurant called D Stage. It is a Michelin star restaurant. I don't know if they have 2 or 3 Michelin stars, but they have like a pre-fee menu and it's amazing. We're big foodies, so we like to eat. We travel a lot to eat too.
Yeah. Wow, nice. Little private jet ride, or?
I wish. I've actually never been in a private plane before.
Yeah.
No,
Funny.
I just have to save up my credit card points and fly in business class award tickets.
There you go. How about best book you've ever read? What do you think a new investor maybe should read to get going in the business?
Oh, yeah. Okay. So I recently read What It Takes by the founder of Blackstone, which is a very good read. But I think a beginner should, hit some of the basics on just like money mindset, which includes The Millionaire Next Door. That was like one of the first finance books I read. And I also really like Never Split the Difference. It's one of my favorite negotiation books. I've read it a bunch of times. I still read it every few months. It's just really good.
Great negotiation book, right?
Yes.
Yeah. So I always think that you have to be real. There's things we've got to be really good at, and that's one of them.
Yeah.
Doing what you and I do is so. Hey, so last question: where do you see the market headed in the next 6, 12, 18 months?
So I think 2022, believe it or not, is still going to be a very hot market for multifamily. I don't see prices really easing up. I don't think that we're in a bubble, right? I think that we are seeing a lot of supply and demand issues and affordability issues. And so I think that this year is still going to be a big year for multifamily for a few reasons. One, there's still a lot of sideline capital from 2020 that needs to be deployed. 2, the 100% bonus depreciation tax benefit goes away next year, or not goes away, but starts decreasing next year. It drops down to 80% and then phases out year over year. And also, with inflation coming out as high as it has been, income producing real estate is an inflationary hedge. And I think that we're going to see more capital flocking toward that. And then, depending on what happens in Europe and with Evergrande in China, I think we'll see more capital seeking safer assets in the US versus abroad. I think we'll start seeing a divestiture from overseas investments and more capital seeking home in the US. So I think we're still going to have a very competitive year this year. I think it's still going to be very tough to get deals. I think cap rates are going to maintain where they are. Maybe dare I say, compress a little. Um, and then, I think next year we'll start seeing maybe slight cap rate expansion, but mostly stability and maybe fewer competitors in the market, but we'll see.
Yeah, we'll see. Are anybody switching asset classes yet? I think that some of the players moved from multifamily into warehouse, right?
Yeah, I like warehouse. I like self-storage right now. We invest into those personally, but multifamily is one of those spaces where it doesn't matter what's happening in the economy. Everybody needs a place to live. It's kind of the best of both worlds of commercial and residential real estate kind of mixed in one. And, historically, multifamily has always had the highest Sharp ratio, over the last 30 years. So I don't anticipate it being any different. It's a good risk adjusted return. It produces income. It's tax efficient. It's scalable. And it's not as volatile as other asset classes in the real estate sector.
Yeah, and interest rates are still historically low.
They are. I know a lot of investors are like, oh my gosh, 5%, 4%. And, when my family was investing, I think my parents' first asset was at 16%. So,
Me too.
if it gets that high, then, maybe we raise all equity deals, no debt.
I remember I went into real estate sales in the early 90s, and I remember being in an office and the guy, and I said, what's the, having the conversation about what's the market like? And he said, the market is so hot right now that houses are selling while the signs in the front yard are still vibrating from the installation. And he said, and the interest rates were 17% at that.
Yeah, it was ridiculous.
Yeah. So I really don't have a lot of sympathy when somebody says, "Oh no, the interest rate on my house is going to, float from 4 to 4.5."
Yeah, no, what it is, it's all about risk mitigation, right? So
Right.
we know interest rates are rising. It's not a surprise to anybody that's in this field. So what we're doing is we're underwriting for higher interest rate assumptions. We're baking in escalations. We're buying down rate caps at, maybe a larger clip than before. We're leveraging less. So I think that's how you have to kind of look at it.
Yeah. Well, Veena, this has been awesome. Any parting thoughts? And please tell people how they get a hold of you if they have an interest in connecting and hearing what you're up to these days.
Yeah, I would say parting thoughts are, if you are looking to get into this space, don't be a spectator. Get underwriting deals, understand your numbers. Everything, including raising your capital, starts and stops with your numbers and knowing them and understanding what your business plan is, how they work with each other. How does, NOI affect cap rate? How does the cap rate affect your operating cash flows? Understand all of those things and get comfortable with them. So that would be my parting words. As far as connecting with me, you can reach out to me on my website, www.vivefunds.com. I have an investor portal there. I also am on all social media as Veena Jetti. And so you can find me on like Instagram and Clubhouse and Facebook and all the social media.
Must be getting to be time. Everybody's trying to ring your phone now.
Yeah, I'm exiting, in the process of exiting 7 deals right now, and we're acquiring a new deal. So it's been hectic around here.
A little busy. So, hey, Veena, I'm going to move you to the back room real quick. I'm going to say goodbye, and we'll hang out for a minute, okay?
Sounds great. Thanks for having me, Mike.
Yeah, you bet. Thanks for being here. Hey, everybody, there we go. Another Thursday morning. What a great episode, right? And one thing that we try to do is try and bring great people to Thursday morning every week and talk about the multifamily space or just life as an entrepreneur, right? So join us every week. Veena was from the Chicago market, lives in Dallas now, works from Dallas, but knows this market well. So I try to bring that talent and content relevant to this local market. So, hey, I'm glad that you were here today. I remember we're here every Thursday morning at 8:30 Central Time. So if you need anything, reach out to Veena. She'll be more than happy to talk to you about what she's working on right now and see if you can't or be an asset in your world and your network, and reach out to me. If you have any questions or anything I can do for you, don't hesitate to reach out. You can find both of us on social media, anywhere you get your fix. I know that's where we are. So I want to just wish you a happy Easter this week if you celebrate Easter.